Hey everybody, good morning. It's the 25th of February 2021. It's about 10:38 in the morning here. And we've been talking a little bit about what the market is doing today. It's still pulling back a little bit, and I want to take a look at what our current count is. Before I get into any of this, of course, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research. I'm just giving my opinion on the market. That's all. What I'd like to do, get right into it. All right, I'm going to start by taking a look at the S&P 500. Going into our live scene here, this is what we have been watching for a while. So what I want to do is sometimes it is important to dig in a little bit. I'm on a 30-minute chart, and that's pretty far down there. And I'm pulling in, and I think it's a pretty good count so far. All right, so we have a finishing move up here. I think it's pretty obvious that we finished something back here on February 15th. All right, and now what I saw is a nice 1, 2, 3, 4, 5, then a correction up, A, B, C, and then a nice 1, 2, 3, 4, 5. All right, so this was an A, B, C, all right, as I've outlined here, and that's of wave A. Then what did we have? We had 1, 2, 3, 4, 5 into the A, B, C into the B, 1, 2, 3, 4, 5 into the C of wave B. Then what did we have from there? We had a 1, 2, 3, 4, 5, A, B, C, and then 1, 2, 3, 4, 5 to finish that move, to finish wave C. Now this 2, I don't think is in yet. And I was saying that, it's very, very possible that we do find our way back down here at 37.69. Now, I want to point something out here. This is really important that you understand. This was a very technical correction. It was a very technical correction. We came down to the 50, which is a good high probability place for a bounce. No doubt about that. We caught 2 long positions while we were down here. I mean, yeah, all the other positions that we were in were not doing real hot. We got stopped out on quite a few positions back here. But the whole reason why corrections do this is so that there are less bears on the next leg down. Okay? A lot of people are pretty darn bullish. They're like, oh yeah, look at this V-shaped recovery. We've got an inverted head and shoulders. We're just going up. We're doing nothing but going up. We are at a very critical area right now. I've got my bullish invalidation level right here. If we close hourlies below this, then the scenario where we go down to 37.69 becomes much more realistic. And just keeping in mind, this 618 falls in line almost exactly with this negative 236 extension target. And what I'm doing here, I'm taking from this top here to this bottom here, I'm measuring that. That's what I've got this measurement over here. And we went above the 786, we didn't get to the 887, and I'm just going to zoom in a little bit here. I'm actually going to go to a 5-minute time frame, which I don't like doing, but it's going to help. It's going to help me visualize this for you guys. All right, so we had an A wave here. I'm not going to dig in and see if this is a 5 wave up into the A, but we had an A wave. A lot of you were saying that this was wave 1. I don't believe it is. We have a correction down here. I'm saying this is wave B. A lot of you were saying this is wave 2. And then all the way out here, a lot of you are like, yep, this is wave 3. I don't think it is. I think this is an A, B, C, A, B, C, A, B, C. All right? This finishes that move. This is not wave 3. First off, we didn't even get to the 100 here. Measuring this A, B, right? So let's just put this in here. From the bottom, we have an A. We have a B, A, B, C into the C on a higher degree. All right, I'm even going to change the color a little bit here just for a little bit of contrast, right? I say that all the time. We have a bullish and a bearish alternative here. We are basically at a pretty important level. If it doesn't look like one, but if it was a wave 3, we need to find support in this area. We have to find support in this area. In my opinion, I think we are to that point where we have to realize that we may be going down a little bit further, but we're at an important level here. All right. Would I be interested in shorting here? I would wait for a bounce, personally. I would wait for a bounce. What I can't really see with any amount of certainty is an impulse down yet. Now, if this is, A, B, C, right? Then what we're basically finishing here, let me just zoom out. Again, we've got an A, B, C, A, B, C, and then we should be working on another A, B, C to finish this move, right? So let's just put this in here because this is, this is kind of what I think is going on. A, B, C on an even higher degree. And let's just go ahead and change the color on this guy too. We'll go ahead and make it, we'll make him orange to finish wave 2. How long is it going to take? It's not going to happen today. It may not even happen tomorrow. But I can say this negative 236 extension target is sitting there, right? If we have this pullback here, we have a dominant pivot high, which is where our high is over here. We have our dominant pivot low, which is where our low is over here at 3804.75. We did the retrace. We didn't really hit a technical target. We did go up pretty high, which leads me to believe that we're not going to fall. Like the floor isn't going to fall, right? But man, this level down here, let's take this, maybe it actually extends into March a little bit. February, generally speaking, is not a good month for the stock market. For equities, it's generally not a good month. But what I can see, this does not look like a 3, 4, 5. It's not that I've taken it off the table, but we didn't hit a really great upside target here. So let me just remove this guy. I want to clean this up because there's just a lot of garbage on this chart. I think this fib pull is also very, very important. We've got our dominant pivot high and we've got a dominant pivot low all the way back over here. This is at 36.56, which is based off of this low, this wave 4 that we've outlined. Again, I think this is pretty good. We've got a nice 1, 2, 1, 2, 3, 4, 5 into the 3, A, B, C, D, E, into the 4, and we go up here into the 5, which I believed is wave 1. This means that we're going to be going higher, right? Let me just go to an hourly time frame so we can see all of this because it makes a lot of sense. Hourly time frame. Let's kick this out here so we can see. Obviously, I've got a lot which I already explained to you, but back here, 1, 2, 1, 2, 3, 4, 5. Into the 3, A, B, C, D, E, into the 4, 1, 2, 3, 4, 5, into the 1. Then we've got our A, B, C into the A, B, C into the B, A, B, C into the C of the A. More than likely of the A. All right, so what does that mean? We've got an A, B, C into the B. Now, are we going to find ourselves actually moving up a little bit higher to this 887? That is very, very possible. But for right now, what has me second guessing this being an impulse is this right here. That is corrective. That is very, very corrective. There is no way that you can convince me this is impulsive. This is corrective. Look what the market is doing at this very moment. We're still pushing down. Yep, there's 13 minutes here. We close an hourly below this. You need to be looking to short bounces. This is not healthy. This is corrective. This is still corrective. Okay? This is the reason why I did not take any new trades yesterday on the Discord server. And if you're not on our Discord server, there's a link in the video description for you to join our Discord server. This is the reason why I didn't add new risk yesterday. I wanted to because everybody was bullish, but I'm like, you know what? No, we are not going to overexpose ourselves right now. It just doesn't seem like the right time to do it, and this is exactly what's happening right now. Are we going to get a bounce? Yes. Is it going to happen today? Maybe. Maybe. But one way or another, what you should be looking for is a nice 1, 2, 3, 4, 5 into the A, B, C, and then A, B, C, A, B, C. We're going to make ourselves more than likely, based on the price action that I see at this very moment in time, price action that I see, it looks like we're going to make our way down here. It looks like it's going to happen. It is just going to take some time. So this is what I think on the S&P. How does that affect other markets? Well, let's take a look at NASDAQ. Haven't taken a look at NASDAQ in a little bit of time here, right? Yeah, you see, this looks worse. NASDAQ looks worse than the S&P does, right? So we've got our flip short down here, right? This was back when we were talking about taking long positions, right? And again, we scalped some long positions and it worked out pretty well. This was not yesterday, but the day before when we hit this low, right? This was back on the 23rd of February. We scalped a couple long positions. It worked out pretty well. This looks corrective. This does not in any way, this does not look impulsive at all. Again, let's just go ahead and just count this from here. A, B, C. Okay, that looks corrective. Then from there, A, B, C, an expanded flat. This, this is rough, right? You could call this the A, the B, the C. One way or another, this is not impulsive. This is corrective, which means more than likely we're going to see continuation to the downside. Let's just go ahead and see if there's an important channel break. We have a channel break right there. What does this look like to you guys? You guys tell me, what does this look like? This looks like more than likely what's going to end up happening is we're going to see something like this, and then we're going to break. We're going to fall. So when I'm talking about shorting the bounces, that's what I'm talking about. Because again, you have this A, wherever it's going to land, you've got the B, the bearish retest, you've got the C, and maybe, since NASDAQ has been looking weaker than the S&P 500, maybe we don't go as deep. Maybe we don't create a new low on NASDAQ because the NASDAQ has been weaker compared to the S&P 500. A, B, C. Yeah, we didn't even get that. We didn't even get an A, B, C, D. A, B, C. Yeah, no. This looks more just like an A, B, C to me. It doesn't even look like an A, B, C, D, E. It just happens to be in a wedge type formation. It looks just like an A, B, C here on a higher degree. Different color scheme for some contrast. It looks to me just like an A, B, C. It just happens to be in some kind of a in a bearish wedge formation. All right. Am I bullish? I am, but not yet. Not yet. I'm preserving capital as much as I can. I'm not overexposing myself. Maybe looking for a short-term, short position overnight, possibly. We'll see what happens tomorrow. We'll take a look at Max Payne. Let's see what Bitcoin is doing. BTC USD. What is our good friend Bitcoin doing? So we're right here trying to push through this. This red area that we have identified as previous support, or really previous resistance. Let me go to an hourly time frame here. We've been watching this, you can tell, we've been watching this for a long, long time, right? So we bounced down here. We didn't hit a technical target though. So I still tend to believe we're going to come down here. Again, I thought that it was going to take some time. One way or another, we've got some chop. We've got some chop. I would have loved to have seen him come all the way up here to the 786. What I've got here, just a lot of chop throughout most of, at least the next couple weeks. Lots of chop here. Are we going to come all the way back down here and retest 42,150? Well, when I created a video a couple days ago, and based off of this, it was somewhere back here. I said, you've got too many people that are calling this price is going to go up, and the price went up. So now I'm of the stance that you've got a lot of people that are probably getting really bullish again. So the likelihood that we come back down here to 42, I mean, it's pretty high. It's pretty high. Again, this is not impulsive. This is still corrective. And I kind of expected that we would see a price action up here. Maybe we do make ourselves up here to the 618. 618 would be okay for us to come up here. Right there. That's going to be our 1618 target. A, B. I mean, we did kind of get some resistance here at that 1236. So maybe we don't even get up this high. Maybe we just stop here at the 50 and we reject and we make ourselves all the way down here now. Really, it's going to be hard to tell. What does waves look like on Bitcoin? This 12-hour is getting really, really close to the bottom. So if we do get that push down, guys, I mean, as afraid as you are going to be, if we do get a push down here to 42, you have to buy. don't do stupid leverage, right? You have to buy down here, buy spot down here. If we make ourselves all the way down here to 42, even 43,000, buy. Yeah, it's going to go against you. You're not going to catch the bottom. If you want to wait for a bounce, okay, I can appreciate that. But don't be afraid, because I mean, we had a waves buy back here in this candle, and that is currently profitable. Would I exit that position? Yeah, I mean, we're basically right up here at technical resistance. I would be looking to see what happens. And this would coincide with S&P as well. Like, we don't have the same formation. We don't have the same, like basically a rising wedge here. I mean, I guess you could say that we do have something along those lines. But if this thing breaks, we're going to come down here to 42. For right now, I'm cautiously optimistic, but it wouldn't surprise me to come down here. It would not surprise me one bit. This is, my friends, my analysis on the S&P 500, NASDAQ, and Bitcoin. If you need access to our Discord, there's a link in the video description. Thanks for joining, thanks for watching, and wherever you are in the world, I hope you're having a good day, good night, and a good evening.